Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 31st of January 2019. I'm Darren Sinden, and of course you can follow me throughout the day on Twitter by using the handle @ds_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of, and one or two things worth noting overnight. Probably a busier session than we've seen across much of this week. First of all, the euro continuing to make gains against the US dollar, up by around 0.2% against the US currency overnight. We've also seen pushback from both the Australian and New Zealand dollars, the Aussie adding another 0.22% to its recent gains, and the Kiwi adding 0.24%. So both of the antipodean currencies on the front foot. The Japanese yen also making gains against the US dollar. Dollar yen trading at 108.74 shortly before we recorded the video, and the yen adding 0.25% to its recent tally. The Mexican peso, however, moved the other way yesterday, dropping 0.16 against the US dollar, or I suppose we should say the dollar gained 0.16 against the Mexican peso. But perhaps the most impressive move of the day was from the Brazilian real, which really took almost 1% off of the dollar yesterday, the real gaining by 0.95% against its US rival. Dollar index amongst all of this trading pretty unmoved, 95.26, down modestly by 0.08% shortly before we recorded the video. Perhaps rather surprising given events overnight, which we'll look at in a short while. Okay then, what's on the calendar? Events that may move the markets today. A pretty packed calendar. It must be said. We've already had consumer confidence data out of the UK, an official version from the survey company GfK this, but perhaps of more importance, Chinese official manufacturing and non-manufacturing PMI data for January, which we'll look at momentarily. To come at 7 AM, we shall have German retail sales for December, and that'll be followed at 7:45 GMT by CPI data from France for the month of January. And at 8:55 AM GMT, we shall have the unemployment data for January out of Germany. 9 AM sees a release of several data points from Italy. First of all, December unemployment in the country, and then a preliminary reads on Q4 2018 GDP for Italy. That'll be followed as well by a very early read on GDP from the Eurozone for Q4, but we'll have a better read on that with the release of the second set of data on the 14th of Feb. At 10 AM we should also get unemployment in the Eurozone for the month of December, and at 10:15 the first of the day's central banker speeches with ECB board member Mersch speaking. Then we'll cross over the Atlantic at 13:30 and into the USA for continuing and initial weekly jobless claims out of the States. Of course, this data takes on more importance ahead of tomorrow's non-farm payrolls data. And at 13:30 also, just over the border in Canada, we shall have gross domestic product for the month of November. Back into the US for 14:45 and the Chicago Purchasing Managers Index for January. And then a pause until 1600 when we'll hear from our second central bank speaker today, German Bundesbank President Jens Wiedmann. Mr. Wiedmann doesn't speak as often as his peers, so whatever he has to say is often listened to very intently by the market. And at 17:30, the third of the day's central bank speakers, this time from the Bank of Canada's Wilkins. We pause then until 21:30 and cross over the Pacific to Australia for the IAG Performance and Manufacturing Index for January, and that's followed at 23:30 by jobs and unemployment data out of Japan for the month of December. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Federal Reserve has confirmed that US rate rises are on pause for now. US equities rally on the news. So the Fed was more dovish probably than some had expected, and certainly it seems that any ideas of more than one rate rise in the US in 2019 are on hold. Meanwhile, Chinese official manufacturing PMI data is printed below 50 for the second month in a row, the January data revealed, though activity in the service sector showed a welcome pickup to a 4-month high. So disappointing news there on the manufacturing PMI. Services growing again, but we'll look at some of that data in a bit more detail momentarily. Meanwhile, Samsung and Microsoft earnings have disappointed overnight, but Facebook and Qualcomm, chip manufacturing rival to Samsung, have impressed to the upside. Okay, food for thought, something to take away with you into the trading day and beyond. And why not think about this? And what I've done today is draw 3 charts or find 3 charts that show differing views on what's happening in China. First of all, a chart that looks at the manufacturing PMI, the official manufacturing PMI in blue, and the Caixin survey-based data in the pink line. You can see the official data trending downward and remaining below 50, although today's January print was slightly off of the lows seen last month. And nonetheless, the trend is depressingly lower. But surprisingly, both Chinese stocks and the renminbi are off the bottom, and in fact the renminbi has moved to a 6-month high, and Chinese stocks have edged higher during the month of January. So to some extent the Chinese markets seem to be pricing in some of this bad news, maybe discounting this and looking forward to additional stimulus from the People's Bank of China and the Beijing government to try and turn the economy around, and that's what they're hoping, I would suggest. Okay, it's time to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account manager and they'll be happy to take you through that. And please do take the time to read this risk warning thoroughly. Thank you very much.